This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from this CNBC-TV18 Motilal Oswal studios. It's a Tuesday morning, not a Monday morning. We're coming out of a 3-day long weekend. I think the last one in a long time now. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning.
Good morning.
The only good part is that we missed the Monday blues, right?
Yeah.
So, but I think, how many of you were ready to come to work today? I wasn't. I mean, after a long weekend, so many holidays, right?
Actually, I'm fired up today.
You're fired up. Only 4-day week.
I think, I'm feeling good this morning.
I think the Bulls are feeling good as well.
Bulls are feeling good. The question, Sonia, is that are we going to make a new high, right? A new high is not very far away. No. It's about 2% of the Bank Nifty. It's about 4% of the Nifty. And, I want to start with a question, which is, is the market exhibiting signs of a melt-up, right? That's the question I want to start with. What is a melt-up when we define a market melting higher? It's basically driven by, it's a very sudden change in price in either direction. In this case, it's up. It's driven by, part greed, part FOMO, part left-out feeling. And it's very quick. I mean, that's why hence the term melting up or melting down. And Friday was a case in point. We were making this point earlier in the day on Friday about whether this is a melt-up. And, last 1 hour changed things completely. Actually, forget last 1 hour. The last 30 minutes changed things completely. The Nifty added 100 points in the last 40-45 minutes. The Bank Nifty added 300 points in the similar time period. So Friday and the previous last few weeks are slowly building into that kind of price action, which I would define as a bit of a melt-up. As I said, the Nifty is just 4% away from the lifetime high. The Bank Nifty is just 2% away. So if you do see a continuation, these are not very far away targets. Even when the market was down and out, these were shallow corrections at an index level. It was not as if the market was down 20% from highs. And now we are very, very close by. On the Bank Nifty, which has been the stronger of the two indices, it's even closer as compared to the Nifty. Just a quick bit on global cues, because you'll be reacting to 2 days worth of US markets. So the S&P is up 0.79%. The Nasdaq is up about 0.58%. This is the 2-day change. The big cue, of course, is the Fed meeting, which is tomorrow. The decision is tomorrow. A 25 basis point hike is seen, and many are betting that this will be what many are saying one and done, which is that one hike and then the Fed is done. Many are also betting on the fact that the Fed will give an indication that after this hike, it'll be a long pause all through the bulk of the rest of the year. If you get a very explicit kind of a signal, it'll be extremely dovish. But if you don't get a kind of, not a commitment, but an indication, and the Fed leaves things open and says, we'll watch data, etc., I think that may be construed as a bit hawkish. So we'll see which way things go. But that's the big cue. Make no mistake about it as far as markets are concerned. Okay, levels now. On Friday, the Nifty almost got to the 61.8% retracement of the entire fall from the all-time high to the recent low, the March lows. So, the 61.8% retracement is 18,100. Friday's high was 18,089. So that's how close we got to within that 61.8% number. The very immediate resistance levels are 18,100. And then 18,137. These are near-term resistance levels for the index. We're just 4% away, as I said, on the Nifty. So I think that's the logical, bigger kind of target that I think people will have their eyes on. That is 18,887. On the downside, the lower end of the channel, because the market has moved so quickly and put so much between supports, the lower end of the channel on the Nifty is 17,845. And the 20-day moving average for the Nifty is 17,624. These are the two levels to watch out for on the downside, which should hold in case there is a bit of a drawdown which starts to happen. Similar levels on the Bank Nifty. The Bank Nifty, by the way, on Friday closed above, not even 61.8, which it had taken out previously. It closed about the 78.6% retracement of the entire fall. So it's kind of, past all these retracements. And the logical kind of target, except, of course, you can put very short-term targets, day-on-day targets, but the bigger target for the Bank Nifty is 2% away, which is the all-time high at 44,151. The lower end of the channel for the Nifty Bank stands at 42,960, which should be supports and watched closely at this point in time. So, let's just have the SGX up, and I think that will give you an indication of how things are looking this morning. The SGX Nifty is at about 18,113 or so. The SGX is 18,239. So you'll have to compare it to the Nifty futures closing. So it's indicative of a pretty strong start this morning. Sonia.
Oh, absolutely a strong start, and there's lots for the bulls to hold on to, right? I mean, the bulls are sort of regaining control of the market. And there are a couple of more pointers that I wanted to add to what Prashant was saying. The Nifty, remember, is up almost 700 points in just 1 month. So the momentum is definitely on the upside. And, we've had a lot of positive macro data. So Kotak Mahindra Bank's numbers, I think, really stood out as the big positive trigger for me. Highest ever net interest margins, NII growth, a rocking 35%. The asset quality has improved for Kotak Mahindra Bank. That was, of course, one trigger that the market will latch on to. There was large buying yet again from foreign investors. Both FIs and DIs bought in the cash markets. Over 3,300 crores of buying by the FIs. We also had rock-solid GST collections. The revenue collections were at an all-time high of around 1.87 lakh crores. So a lot of positives that the street can latch on to. But as, Prashant was pointing out, globally there are two things that the street will watch out for. One is any news on the US debt ceiling. Treasury Secretary Janet Yellen has warned that the US may run out of measures to pay its debts as early as the 1st of June. So that's an overhang. But the FOMC meet today, perhaps one and done, a 25 basis points rate hike is something that the street is pricing in. But I'm also looking at some more local cues in the sense one is the auto sales, which have been pretty much a mixed bag. So you had some decent numbers in the form of Maruti, but there as well, there's a bit of a slowdown that we're seeing. Auto sales from two-wheeler companies have been under pressure. Hero MotoCorp has seen a fall. So in that context, autos have moved into the slow lane. So we'll track that space very closely. And it's a big week of earnings. So you have a lot of Nifty components reporting their numbers this week. There's Ambuja Cement, Tata Steel, there's Titan tomorrow, there's Hero MotoCorp on Thursday, and there's Britannia, Marico and Bharat Forge on Friday. So it's pretty much an action-packed week that we have on our hands and could be the deciding factor of whether the market sort of breaks out and that melt up that, Prashant was referring to. But so many more positives than negatives, I think, that the market is looking at.
Well, that's right, Sonia. It seems that getting into the long weekend, the bulls wanted to go full throttle.
Yeah.
In the final hour of trade, the way we saw the Nifty surging, that smelled of big institutional buying numbers, and that's precisely the case. Now, this morning, you're adding on close to around 100 points odd. That's what the SGX Nifty at least is suggesting. So maybe for some, they could take some money off the table. But otherwise, this is pretty much a market where you want to stay net long. But don't just look at the index. The party really has been in the broader markets as well. The Nifty is up close to around 4% the last 1 month or so. The small cap index, well, that's up close to around 7.5%. And that's what's making portfolios feel like the markets are rallying. Otherwise, you have just a few stocks on the Nifty that are moving up. And you'll say, well, my portfolio is not feeling that good. But this time around, and we had pointed this out at the start of April, that out of the last 10 years or so, barring 1 year, every year you had the small cap index that outperformed what the Nifty has done. And that record is maintained as well. So you need to stay long and watch for further upsides from here on. The 100 DMA, though, on the downside, that's closer to around 17,800. That becomes the first level of support. That was a big move that we saw on the Nifty. Even in the futures market, you had open interest build up. And the FIs, they added more longs than shorts, though the market continues to remain net short, which is not such a bad thing. You have 57% of their positions on the short side. Index options, I'm looking at the writing of puts. And that's very, very encouraging. Close to around 3 lakh puts were written on the first day of a new series. And in terms of active strikes, the 18,000 put, that's the one that stood out. More than 80 lakh shares getting added out there with a premium of close to around 45 rupees or thereabouts. So that's telling you that the bulls feel that they have the momentum with them. Just comparing two strikes now, you pull up the 18,000 put and the 18,000 call. The 18,000 put has close to around 1 crore shares out there after this addition in terms of open interest. So clearly the data points are suggesting that we're in for higher levels. But stop loss would be important. That will be at lower levels, close to around 17,800, 17,825. That's where the 100 DMA comes in. But at higher levels, the resistance, I think, we're likely to face at around 18,150 to around 18,200 going by the options data. Now, you look at the Nifty Bank as well. That's been the one that's been leading the way, the big outperformer the last 1 month or so. And the 43,000 put has been seeing aggressive writing. support zone out there. Because the premium's around 152, at some point of time it was closer around 300 rupees or thereabouts. So those writers, they're counting on the 42,600 to 42,700 odd mark holding out. SGX Nifty suggesting a big gap up. For some, maybe taking some money off the table will be a prudent strategy, but you need to stay long in this market, going by the ferocity of the move and going by the data points as well.
All right, well, that's the market setup for you. Before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe. Cameron Brand of EPFR Global will join in to discuss the global trade setup. Flow-wise, I mean, he'll run us through the numbers. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At 8:30, we do a fundamental stock analysis with our expert, Prakash Diwan.
All right, let's begin the day with some stock talk. On the equity side, we have David Doyle of Macquarie, who expects the FOMC to hike the Fed funds rate by 25 basis points on Wednesday, which would push the target range to 5 to 5.25%. There is a likelihood of a further reduction in the forward guidance. Despite this, he adds a statement and communication from the Chairman Powell should keep open the possibility of further hikes, marking a shift to data dependency. He says there is likely to be no indication that rate cuts are being considered. He says while growth appears to be slowing and cracks are emerging in the labor market, underlying inflation measures remain concerning, and this is likely to keep policy constrained going ahead.
All right, let's get you some money market views as well. Abhishek Goenka of IFA Global says the upcoming week features key events like the Fed rate decision, the ECB decision and the US April jobs data. He says the market predicts an 85% chance of a 25 basis point hike by the Fed. But with concerns over small banks and uncertainties around US debt ceiling, the Fed may not be too hawkish. He says the ECB is expected to hike rates by 25 basis points with a 12% chance of a 50 basis point hike. He's expecting US dollar weakness and the dollar index to break the 100 mark eventually, though it may take longer given the Bank of Japan's dovish stance last week. He also foresees a slight appreciation bias in the rupee, and he expects that to trade in a range of 80.5 to 82.5 to a dollar over the coming weeks.
All right, and on the bonds, Ajay Magnolia of GM Financial says with consistent aggressive bids for government securities at the latest auction on Friday, bullishness persists amongst traders as the majority feel that the RBI may maintain a prolonged pause. He says the major trigger would be Fed's further rate guidance tomorrow as concerns linger in the US, wherein inflation still remains sticky. He believes a sustainable stability in the market with yields trading in a narrow range. He expects the 10-year benchmark bond yield to trade in a range of 7.09 to 7.14% for the day.
Well, that's the entire trade setup and market setup, but we've got a lot of stocks that we're tracking for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Kotak Mahindra Bank, Ultratech Cement, Mahindra Financial, IDFC First Bank, RBL Bank, Vedant Fashion, as well as Adani Green. Their stocks on the back of positive news flow, while we have SBI Cards and L&T Finance, their stocks that could be reacting to negative news flow. And also, auto stocks, well, they're in focus. It's more or less a mixed bag, so that's where we're going with an amber color.